Welcome to Bears in Exile. Today is May 22nd, and this is the market overview. We're looking at the Dow Jones right now, and uh, we have a couple of things going on. Well, of course, we had a big red day on Friday, and we do have some separation of the short-term moving averages, and they are all pointed down. Of course, long-term moving average is still in effect for the bulls, um, and we almost have a complete separation prior to going into the bar, but not quite. We still have a partial flat line, so we can't glean anything from that. Secondary indicators, we notice we have a new tick down on the MACD histogram, and the MACD is still pointed down. Stochastic is pointing up from being pretty darn low, and the RSI is still pointed down and has a little bit of room to move. Beyond that, what do we have to work with? Well, we have this fun line here from the April 18th connecting with the low on the 17th, and we don't know if that line is going to do anything. We also have a possible range channel right here on the Dow, and it is moving down. You might say that that is a bear flag. Certainly it's going to have, it should have some problems dealing with this the long-term moving average. We've had so much chop that we still do not have a definitive answer, but the short-term moving averages are pointing down once again, so we'll have to keep a look on that. We're also going to look at the 60-minute and see if there's anything else that we can get. Here's our little fun line, and it has a little room to go before we can see if it does have a effect. When it, oops, I just messed up that line. I'll just get rid of it. We have a little ways to go to see if it has any kind of interaction with that line, which would be about right here. About 12 425 roundabout. I think that's right. Well, right about there. Anyways, we also have this channel, potential channel, and I connected it to solid lines. You can see that it does pop out of the channel and snaps right back. A couple of piercings here and there, and no channel is perfectly clean, so that makes sense to me. It is entirely uniform with the bottom channel, and that's a nice. It's just clean. So if this channel is true, we could see it go all the way down to 12,300 roundabout, perhaps even just a hair lower, before it has interaction with the bottom channel and pops back up. That's if it wants to go down and test that. Of course, this some people could be right, and this is a bull channel, in which case it'll break out to the upside, and away it'll go. One dissenting thing I have is head and shoulders pattern on a 60-minute, left shoulder, head, right shoulder, and if we, there's two measurements here for its neckline. We have this higher one, and we have this lower one. You could choose from here or from here, and the target then varies greatly between 170 points and something like 220 points, and if that's the case, then it also brings it down right up to the 12,320 target area, and just below if you're counting the lower neckline. So both of those numbers would correspond with the bottom of this channel, so that makes sense to me. Secondaries on the 60-minute have all kinds of room to go, and everything is pointed down. Short-term moving averages are pointed down, and we do have long-term bearish moving averages in effect as well. So that certainly makes sense to me. and we'll have to watch and see if that happens. But certainly this is a much more bearish image than the daily. I mean, the daily, yeah, we are starting to get separation, but it has this big bar to deal with, and going down to 12,300 means that it's going to have to get all the way through the bar, and then the bar is going to start looking really bearish as it begins to turn over. So, you know, mixed signals, and a lot of that is the same on the SPX. And we have our neckline, which was closed below again. Yeah, we've had so much chop. The short-term moving averages are expanding and pointing down. Does have the bar to deal with, just like the Dow. Just like the Dow, we could be in the channel. And I had drawn a few other lines just as for theory, you know, connecting the two bottoms of the lows before and seeing if they had any interaction. They didn't really. And then connecting the previous low to the one we had a couple of days ago, our little fun line, and you know, we have yet to see if that has any impact when it connects with that, if it connects with that. All the secondaries except for the stochastic are pointing down. We have a lower tick on the histogram, just like the Dow. And just like the Dow, we have the head and shoulders, left, head, right. And, you know, and it has not met its target for either of, you know, the neckline areas. So, you know, if we do, then we'll be looking at, you know, the just above the 1310 area, another 20 points or more to the downside to see if that's the case. And on the VIX, of course, we had a big green bar. You know, we don't even have separation yet on the crossover, so there's not much to be seen here. Will it be able to hang on to all of this? You know, it all comes down to the dollar and the euro, and we are going to take a look at both of those tonight. They won't be in this video, but they will be in the next one tonight. Let me see if there's anything else to see on the euro, on the VIX. Well, besides everything pointing up, there's not going to be too much to see on the VIX. Nothing that's going to give us any really important data. And you know, there's some signals here that, you know, might be something. You could say that we have an inverse head and shoulders, you know, shoulder, head, shoulder, you know, and since this is inverse to the down the S&P, you know, of course we'll have a big target. It'll be up near 20 or so. So there's just, we have to see which one works out. And then we have TNA. Now TNA did end with a hammer. All those short-term moving averages are pointing down again, and the bar is just massively getting just destroyed. Secondaries, the MACD is pointing up. I'm sorry, the MACD histogram is ticking up. MACD itself is still pointing down, and the stochastic and the RSI are pointing up. So we have 3 ups and 1 down, and we have a hammer. But at the same time, we also have the short-term moving averages pointing down, and the bar just really compressing. I would not be surprised to see this bump up, or at least fight and hold steady. The only bad thing about that is that even a sideways move here is going to compress the bar further, weakening it, setting it up to fall. So something to be concerned about. And in the 60-minute, everything is pointing down, which is not surprising considering the other indexes. Well, that's it for our index look for the weekend. We are going to be doing silver and the dollar, the euro, and several equities individually as well. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.